when it comes to the environment right now, say what you will of some of the banking problems we've had, they kind of actually helped out this inflationary argument. I want you to listen to this. Take a look.
Banks are likely to become somewhat more cautious in this environment. We already saw some tightening of lending standards in the banking system prior to that episode, and there may be some more to come. And that does tend to lead to somewhat greater restriction in credit that could be a substitute for further interest rate hikes that the Fed needs to make.
All right, that's a kind of a perverse way of looking at it, because banks are all of a sudden being very stingy with lending. That'll slow things down. She's probably right about that, but I wonder what Alan Uckman thinks of that, the Bullseye Option chief market strategist. Alan, this bank trouble, she's saying, is actually going to help the Fed, I guess, a little bit and slow things down. Your thoughts?
Yeah, and it looks like there's a 90% chance that they're going to raise rates in May, and then we're done, and then this cycle is over. The key is, for me as a trader, it's price, not politics, and it's follow trade, not the talking. And the markets are still strong and solid and stable. And we did have one bad bank bust that might pull people back a little bit psychologically. But again, the market is really strong, and we're back up here near the 4,200 level in the S&P. So that's what I can gauge. If we can break out of that, then it's very positive.
Are you saying then, just to be clear, that they hike in May and then go away?
It looks that way. That's what the market's been telling us. And the market's had it right for this last year.
For the rest of the year, Alan? For the rest of the year, they're done?
Yeah, it looks like it's done, and you're actually seeing rate cuts in the future, and then you go down to 3% in 2024, 2025. That's what the markets are telling us. Obviously we've got some work to get there, but I think the focus needs to be on the dollar. Now, some people were confused, and they took some, Miss Yellen's comments about the dollar getting knocked down. I don't view that as a negative. It was really strong, just last year when we were up near the 120 level. Now we come back down to 100, but it was only 2021 we were at 90. So we're kind of at a midway point, and actually the dollar's not strong, the dollar's not weak. Ever since I've been trading, since 1986 when I graduated high school, the dollar index has been trading between 80 and 120. Right now we're sitting at 100. So we're just at a medium level, so to speak.
I knew you were younger than me, Alan. I didn't realize that much younger than me. But you look great, and I'm jealous, but that's fine.
Thank you. Let's not go down the road. Let's talk about the markets.
Well, you're right. It's a very scary road to go down. I'm wondering if this outside event could be a big moment for stocks, a key test for them. Banks that are, trying to lure, that is the small or medium-sized banks, not so much the big money center banks, although that's changing, with significantly higher deposit rates. And if you're right that we might be capping out at rates, couldn't that be a last dash for safe cash on the part of people? Even now, when Apple is looking at essentially doing the same with a 4+% money saving rate, people might want to get in on that, and it could come at stock's expense.
Right.
What do you think?
Right. We've talked about money moves, and money can move into these interest-bearing accounts that are paying 5% at no risk. Now, there are ways to make more money than that in the long term in the stock market, in my opinion, but that's not a bad place to be while you clear your head. If you look at the PE, the price earnings on XLF, which are the financials, as a group, we're at 12. So the banks now are much cheaper than they were, and they're a good value, but selecting the right banks. Now, like you said, some of these smaller banks, and I think it was the Shark Tank guy that said the other day that some of these smaller banks need to be eaten up, so to speak, and there could be some mergers and acquisitions because the big banks can swallow it all up. So there's opportunity in this sector for sure, I think. Just look at how much money J.P. Morgan and Bank of America made off the net interest income. They lend at, they give people 0% in their bank accounts, and they put in the overnight repo rates and making 4%. So, that's printing money, and that's probably going to continue until you see the average consumer move their money physically from from where it is now to somewhere where it can get higher returns. But I'm a still big believer in the stock market. And let's remember, we're only 14% off the all-time forever high after all of this, after all of these rate hikes, after all of this, concern, and the VIX is at 17. So the market's telling us it's not that worried.
All right, you're talking about the volatility of the index, which is a gauge of fear, and it's pretty stable right now. There are contrarians that look at that and say, well, that's a counter indicator. People are way too sanguine about this. Who knows, Alan? All I know is that you're a very smart young man. I appreciate it. Alan Nuckman, Bullseye Option Chief Market Strategist. Another smart young man with us, Edward Lawrence at the White House.